When the country Singapore comes to mind, I think of a highly developed country with a strong economy and quality of life. And upon looking into this, it seems like my assumptions of the nation are true. However, amidst my research, I discovered something interesting about Singapore that helped propel it into becoming the country that it is today. According to Encyclopedia Britannica, Singapore has a port that is significant in the international trade scene and is relied on by many nations, which got me curious. To what extent has international trade contributed to the economic growth and quality of life in Singapore? And what is its impact on Singapore's development? I want to know how this nation I look at so positively came to be. And this question is relevant because through looking at Singapore's strategies, many other small and underdeveloped nations can get ideas of ways to improve their economy and quality of life. To dive into this, we first need to look into Singapore's history. According to a YouTube video by Neo, Singapore was a significant trading hub under British rule from 1819 to 1963. In 1959, the country gained self-governance, with the People's Action Party, led by Lee Kuan Yew, coming into power, aiming to improve living standards. After briefly merging with Malaysia, Singapore gained independence in 1965, but faced economic struggles due to its trade-dependent economy that weakened after British military bases withdrew from the area and ethnic tensions. To survive, Singapore implemented a state capitalist and interventionist approach. The government began to own and control key businesses and made changes that affected how the businesses and economy operated. Furthermore, statutory boards, organizations created by the government through law, like the Housing and Development Board in 1960 and the Economic Development Board in 1961, came into place. These statutory boards helped in developing housing, infrastructure, and creating a new structure for the economy. Government-linked corporations also led to early economic growth, as they held large stakes in major industries. Over time, the government stepped back and let private businesses grow, allowing it to concentrate on the financial and biomedical sectors. It also started global networking, as it had established the Port of Singapore, the world's biggest transshipping port, and from there it began to invest in whatever sectors were growing at the time. According to Encyclopedia Britannica, Singapore acts as a financial intermediary, which means that the country is essentially a middleman in trade. It ships raw materials, for example rubber and timber, from the Southeast Asia region in exchange for finished goods from within and outside the region, connecting Southeast Asia and the rest of the world. Singapore's entrepot activities that involve storing, repackaging, and refining imports like oil for re-export generated revenue without local production. So how does this role positively impact Singapore? Well, let's break it down. According to World Bank open data, in 1965, the year of independence, the country's GDP was $0.97 billion, with the PAP party implementing policies for the future after coming into power in 1959. Singapore went into an early industrialization period, where it began prioritizing international trade too. This led to the GDP rising up to $11.9 billion in 1980, and a further $101.1 billion in 1997, and $194.1 billion in 2009. From this, we can infer that Singapore's trade sector has led to rapid economic growth in the country's economic sector. And through this economic growth, the quality of life has also improved in Singapore over time. According to Databank, life expectancy has slowly risen since 1960, the time when the PAP party took over. And even though data on literacy rates for adults is fragmented, it has shown signs of recent positive increase. The pupil-teacher ratio has also slowly decreased over time. Through the result of international trade improving the economy, the country was able to improve its education and healthcare system, which means that people get access to education that can help them in the future and have the ability to live long and healthy lives. However, there have also been negative implications to the growth of the international trade sector in Singapore. According to World Bank open data, Singapore's trade sector has been vulnerable to crises in the past, like the Asian financial crisis that affected exports, that led to a dip in the country's GDP between 1997 and 2009. This means that Singapore's reliance on international trade has led its economy to becoming susceptible to crises like that. To solve this issue, the country would have to diversify the industries that it focuses on a bit more to almost have a backup in case there are any issues with the international trade sector. If the country were to focus on other sectors that would support its economy like international trade does, like for example the AI or biomedical sectors, it would be better protected from crises. Furthermore, another issue that international trade has brought to Singapore is that it has led the country to become over-reliant on imported food. According to a YouTube video by Neo, Singapore imports over 90% of its food. Since the country's trade sector is strong, the country may assume that it can sustainably rely on imported food. But, as I've mentioned before, the trade sector can be unstable. This means that, as a result of Singapore's reliance on trade, it's possible that there can be significant negative impacts on its food supply if the trade sector fluctuates. To improve on this, the country has already set a 30 by 30 goal, which aims to have 30% of the nation's nutritional needs produced locally by the year 2030. One way they're doing this is by implementing vertical farms, which are space efficient and can boost local food production. In general, Singapore's focus on international trade has led to improved economic growth and quality of life. The country's role in international trade is significant, and its journey from a small struggling country to a global financial hub showcases the sheer effect that global interactions can have on the development of a nation. However, even though part of Singapore's successes have been influenced by international trade, there have still been negative impacts of this strategy. Singapore's over-reliance on trade has led the economy to become susceptible to crisis and has led to the country not sustainably producing its own food, which can negatively impact its quality of life. Singapore's case has taught us that if you effectively focus on a global interaction as a nation, through also diversifying your economy, you can transform your country. So, for anyone interested in this topic, let this show you that global interdependence can be very helpful for the growth of nations.